Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis, where we look at technical charts and try to understand what happened in the market during the previous week and also plan for a better trade for the upcoming week that's starting from October 6th, Monday 2025. Let's deep dive into the charts first. Here we have the daily charts for the Nifty on the left side, right side you have left side you have the weekly and right side you have the daily charts. So the price is moving between the channels, parallel trendline channel as you can see on the weekly, and we have an inside bar, a bounce up after a sharp fall previous week. On the daily you can see the same, that it was a good inverted bounce up that has happened, inverted V-shaped bounce up, that would say, for that Nifty daily charts. You can clearly see that it was a dip and then move up, but the resistance of the 20 exponential moving average is there. You can see that it's within a trendline channel. A larger trendline channel is there outside, you can see. What about the Nifty? So Banknifty is also in the ascending set wedge on the weekly time frame, medium term for the long, and solid bullish candle, almost like an engulfing candle is what you see on the weekly. On daily charts of the Banknifty, you see that there is kind of a flat pattern within a trendline channel, and price has made a hockey stick move, I would say, a tick mark like this. So a price has a stronger move on the Banknifty is what you see. So candlestick wise, if you see, it's very clear. It's an inside bar. It's almost like a hammer, bullish hammer. Inside bar will mean some consolidation, and because the previous week was very sharp fall. And here you have Banknifty, which is much more stronger, almost like an engulfing candle, solid bullish candle there. So Banknifty much stronger in the candlesticks. And daily, if you see, the last 5 days there was a holiday day, so it was like almost like a hockey stick move on both, right? A small dip on the first 2 days, and then there was a big up move on Thursday and Friday. Very solid one on the Banknifty, as you can see there. So absolute bullishness on the candlesticks pattern wise on the daily, and some consolidation in the Nifty is seen, while big breakout candle seen on the medium term on the Banknifty. That's a summary of the candlesticks panels. So basically, what we have, what we already talked is what is put in here. So market is still may consolidate, because you can see very clearly that there is resistance on the upside, right? All these previous swing highs could act as resistances, right? So if you draw a rectangle there, it is a consolidation basically that is happening, unless the price moves above the 25,700 kind of zones. So it has to clearly give a confirmation candle about the consolidation zone. Until then, it still may be consolidating, moving up and down. And Bollinger Bands on Nifty and Banknifty's little contradiction is there. There is consolidation primarily on the Nifty, and there is expansion on the upside with bullish bias on the Banknifty. So Banknifty again much stronger there, but Nifty is there to climb above the median of the Bollinger Bands. Bollinger Bands is not giving a clear indication of bullishness yet on the Nifty, but very clear indication of possible breakout in the case of Banknifty. So if you look at the momentum and the trend indicator based on the RSI and the ADX indicator for the trend and a multi-time frame analysis, if you do, left side you have the weekly and right side you have the daily. So you can see that Nifty and Banknifty, both of them are having sideways and rising up momentum, not a bullish, make note of that. And momentum again is sideways and rising up in the case of Banknifty, also on the daily time frame. Short and medium term, it is sideways momentum rising up. On the ADX, what is happening is it remains to be bearish on the short term and the long term, except for a slight bullish short-term positiveness is there, but it's having falling strength, not enough strength in the bullishness. So trend is not that great, but sideways momentum is what you have. So that's a summary of momentum and the trend. And volatility can be studied with the help of India VIX. India VIX is a fear and greed indicator. The weekly of the India VIX is showing that it's a sharp fall. It was kind of a sharp up move from the lowest of the low India VIX, the fear index, and suddenly it has fallen back. There was a big fear that came in, then that fear died down drastically. Nearly 14% up price and 12% down. So it's again back at 10, lost of the low levels of the volatility. So it's pretty tough for the traders to have some premium to trade, and there is a high risk of big spike ups in the VIX, which could shoot up the premiums beyond the control, especially bad for the range bound strategies of straddles and all that for the option trading. But otherwise, low fear is indication that Market is fine with the global cues and all the economic and all that factors. That's what we'll have to keep a close watch. Open interest is the bet that the short sellers, primarily the options and the futures, big players, but will have the place a bet is the analysis that you see there. So Nifty weeklies, October 6 weeklies charts are seen on the left side, which shows where the levels are. The PCR is, of course, for the options, it's 1.2 is bullish, very bullish, and PCR options for open interest and Banknifty is also 1.1, that's bullish, but that's only monthly that we have. So overall, futures are showing build up of long build up, that's all. So overall, open interest is bullish because of the Fridays and Thursdays big breakout moves. Now, one way of understanding the levels is to look at the open interest itself to get a clue, but it's very close. The next Tuesdays will be expiring dates for the Nifty, so it could be more accurate because of the betting stuff. Place that way. 24,800 is where the highest put writing and 25,000 is the highest call writing is there. Second highest put and call writing is there. 24,700 and 25,500. 950 is for the monthly expiry. So 55 and 57,000 is for the very wide range of 2,000 points. So what do you see there? Second highest bet on the put side is at 54,500, and for resistance, second highest is seen at 56,000. That's the range that we can get from the open interest. Now another way of finding what the support resistances are by looking at the technical charts. Here is the Nifty charts and this is the Banknifty. Nifty first, it is at a resistance zone of the 20 and 50 exponential moving average zone. So anything about 24, 9, 14 will be optimistic, and the closest happen above that. If that does not happen, then it will be trouble. And if it happens, it has a next resistance at the Fibonacci 23. That's basically primarily the rounding number comes with 25,000, and then 25,100 you have that Fibonacci levels of 23 and the previous highs. Then 25,153, 25, 20, 222. 333 and then 444, so likewise 100 points each, so for the resistance of that. So if 25,500 is taken out, then we could still once again hope for all-time high and break out from here. So that confirmation has come next week. We cannot have any confusion as of now. Similarly, suppose the previous lows that the major support would come in at 24,400 and 24,000 after, if that is breached. It's a 200 exponential moving average comes in there, but above that we have the supports that can be the previous lows that comes in at 24,760, 24,587 and 24,404. So previous lows and exponential moving average supports that you see there. Look closer in all these details. Now looking at the Banknifty, you can see that's a trendline channel or a flag pattern that you see there. The breakout of that about 56,161 will be clearly bullish, but 56,000 is a rounding number that will have resistances, and if that breakout happens, it could head as high as 57,000 on the upside. Downside, the previous lows at 54,200 and 54,000 would act as very good support because that's very close to the 200 exponential moving average. I will look at all these levels that's marked in there. PSL is previous lows, Fib is Fibonacci, DEMA is daily exponential moving average, RN is a rounding number, and PSL is previous lows. That's how we will read that it's a technical analysis that we already discussed. Let's move on and see how these different sectors performed. IT is showing some consolidation, bounce up after the big sharp fall, but it has not recovered yet. It is at negative zones of momentum on the price. Metal has done well. It is the only sector that is bullish last week, really bullish, with the 4% nearly up move that has happened. And we could take long options on the only sector that's metal. It's the only sector that's up, completely bullish zones. Auto, hey, if you see, it is bullish on the medium term, but the short term it is yet to pick up. But good green candle consolidating within the previous weeks of big red fall. But medium term bullishness seen the auto also. Now, if you look down at the pharma, we have the sideways momentum and bounce up to before, and FMCG also bounce up after big fall, momentum is sideways. Reality also sideways momentum, small uprise after fall. So if you look at it in summary, it's the only sector that has performed last week ferociously is the 4% up move in metal. Otherwise it's all 1%, no 1% kind of move. So metal is the only sector probably that is having the bullish momentum, as I said before. Let's move on and see how the different heavyweight stocks contribute maximum to the index is performing. The HDFCs and the Reliance and the ICICI banks, these three contribute a lot to the index, right? So HDFC has done a good job taking a support and making its CIP bounce properly, and it could mean that it could once again try to break out that parallel channel trend line, but momentum as of now sideways, trend is bearish. Make note of that. It's on the weekly term. And Reliance is It's having a red candle and seems to be weak and seems to be liking to go down towards the low. It's got a buying opportunity, but as of now, the line sideways. IGC Bank also showing sideways up. Absolute retracement, it continue to want to fall down. Looks like, towards the bottom of that parallel channel probably. So sideways on all three of the big channels. Now look at that, it is still not done well. It's in the bear zones. Nifty is just managed to hold on the sideways momentum RSI, and TCS is in trouble. It's in bear zones. There could be a momentum pickup that could happen, but as of now it's in the bear zones, and that's big defensive sector stocks that's giving us trouble. And then contrast stocks, as I would say, Kodak Mahindra is consolidating as before within a very close range. ITC is also in the sideways momentum, doing nothing much, waiting for that breakout to happen, but it's in the sideways and falling momentum as well. So nothing is there which really is going to make that big move. So heavyweight stocks are just managed to hold on the momentum, and none of them in bullish zones is a concern. In the sectoral analysis, we already seen that sectoral indices, none of them are really being good except for the metal. That's a summary. Now if you look at the broader markets, it's mid cap and the small cap, you had a potential of a inverted head and shoulder pattern breakout, but didn't happen, and momentum has fallen to sideways. But it bounce up just like the index has happened in the mid cap and small cap index as well. But if that inverted head and shoulder breakout happens, it will be really big and it could go to the top of the trend line channel. So momentum as of now in the mid broader market also sideways, but a greenish seen after the previous week's bounce. Previous week's false bounce is seen just like index. It's a summary of that, and let's move ahead and try to understand how the institutional spot special last week. It's a 14,000 crores of selling once again. Whatever is the big move or the long build-ups in the operators, whatever is done, understandably the FIS starts buying in the cash market, nothing happens. Domestic institutions once again is buying in the range of 20,000 crores per week, as if there is no tomorrow. They had been doing that forever. It's the mutual fund money that's flowing in, the investor conference is coming, and money has been put in the stocks. But how long would it happen? The foreign institution money has to come in, so that's continues to be concerned. But derivatives on the FIDA is also moved flat, is down last week, I would say. Let's look at how the global markets, what are the global cues? Global markets in the sense of the US market primarily. That's what we're focusing on, the global commodities, the gold and the crude oil, and then the currencies. The currencies loop is all-time weak once again. Look at this, it's another flattish up movement, 88.71 USD INR. So is very weak. That's not that great news. But all this spiked up and then just spiked down, moved down last week 0.5%. So that's a relief, but dollar is below 100 is a relief, but rupees remains to be weak and crude oil is falling, which is good. Sharp fall is seen to the 60 levels from the 65s, which is good. Probably due to some peace that's coming in the Middle East. The hopes on that is making the crude oil cheaper. I don't know. That fundamental news behind that, but crude is falling is good overall, but rupees weakening is not that great. And look at gold. Gold is at all-time high when the market is trying to recover, is only good news. People could be diverting the funds more towards the gold. So this is a gold stock that is saying solid breakout, all-time high goals. It's more than 130% of move in the last couple of years alone. So gold moving up as a hedging instrument is good, but as the money gets shifted from the equity market, there is a possibility that the equity market could go in for more corrections if the world is breaking out like this. So keep a close watch on that. Now the US markets, the Dow Jones is having all-time high. There was a US treasury shutdown or something that happened, but markets doesn't care about that, and Nasdaq, S&P 500 and Dow Jones all are at all-time highs with bullish momentum and rising in trend. It's almost 1.1% on almost all of these major indices. That's a green close. Another market closing green is always good for emerging markets like ours, right? So global news is not that bad except for rupee weakening, and the cautious close was required on the gold. Otherwise things look good. Let's move ahead and try to find some actions and all recommendations or all indication purpose alone. So both the calls, the stock picks for the next week is for analysis and study, and probably trade on your own risk. They are both on the long sides. HPCL, Hindustan Petroleum, seems to be rounding pattern breakout could happen, and that could go as high as the top of the trend line channel. Even breakout from that, you can trade it after you make one is the RiskReward. Gold is a very good trend is bullish. Normally bullish on the medium term and the short term. So that's the reason for taking the trade. Another one is Bank of Baroda, Canara Bank, Bank of Baroda, and Bank, Indian Bank, and all these are breaking out. It's rounding balloon breakout possibilities there. Have 10 stop losses and they take the call because bullish momentum in the other side. This trend in the medium term is what you see, along with good volumes. Is the reason for the trade. So two long picks. Bank of Baroda and HPCL, what is the oil sector? There's the banking sector. Let's try to find something actionable on the FLO side as well. So this is a Batman strategies that I had been doing, and we are taking it for the 14th October because the next expiry 7th Tuesday is just 2 days away. There's no point in taking that. You hardly have any premiums left. So it's like basically buying inside hedges and selling outside OTMs without any wing. So that way it's not complete risk reward, but it gives a decent range of 24,400 to 25,500, and this is a good profit also. Right, so don't try to adjust. If it breaks it on the downside, just leave it. One standard deviation to two standard deviation is what the risk I normally take. So this is Batman strategy on the Nifty weekly expiry for 14th of October. Let's move on and try to wrap it up. So market bounced up from the previous week's fall and has managed to close green, and some of the lost momentum has picked up, but trend does not record as much. In end to end, it's a weekly positive close with the highs continue to be net sellers. Both the correction that has happened in the bank is hardly 2.5, and that in the Nifty is 17.5. The last time it did make a swing low, but that is after 70% nearly kind of breakout moves in the last 2 or 3 years, which has happened. So always be ready for the correction is what I would say. But market has got a lot of resistance on the upside, but it has given a good decent bounce, especially on the Banknifty. Now one way to try to conclude on a market view, we used to first analyze and put the different parameters that we already studied into two buckets of the bulls and the bears. In favor of the bulls, we have the open interest, which has done extremely well with the long build up and PCRs above the 1 and 1.5 levels, and India weeks is at very low levels. There's hardly any fear in there, but Banknifty has done extremely well with solid bullish candle and the expansion seen on the Bollinger side daily also, charts also. But although we see bears have a lot of things there yet to recover from, so that is what is outweighing. Like for the fact that the momentum is still sideways, it has not climbed to the bullish zones in the medium term yet. And the trend indicator ADX is not that great. It's showing negative, except for the Banknifty showing some bullishness in the short term. Now, open interest in the is still bearish. Oh, that is wrong. Let me just take it with that. That's wrong. Open interest is beautiful, and Bollinger bands are showing a consolidation only. Sideways movement is what anticipates. For the Nifty, for the Banknifty is good. And for the Nifty again, the price is closed below the 20 exponential moving average, while Banknifty is close above it. Now, sectoral indices, except for the metal, all of them are still struggling and consolidating after the previous trial. It's hardly 1% move only that has happened after a big sharp fall of 4 to 5%. Almost all of the sectors brought them to the bear zones. Now, rupee is at all-time low. That's another thing that's in favor of the bears. Institutions has been selling. Big institutions, foreign institutions especially, has been selling. Although domestic institutions are buying to compensate for that, but foreign institutions are not buying is a concern since long time, and that continues. And heavyweight stocks are all just hanging around the momentum, none of them are in the bull zones yet or the medium term. IT stock is still doing bad. IT used to be the defensive sector, and that's struggling because of the US tax tariff and all this news. So always keep in mind that there could be corrections that could come in any time. Have tight stop losses. US tariff uncertainty, global Q uncertainty is there that will bring volatility and screw up things, especially if you do derivative trading. Technical charts are showing that the market is still weak, and all the good bounce of this week. There's resistances up there. It has to break out of that and the close green above that, and we get a convincing hop for the bullish up move for the next leg, the rally or whatever we call. So therefore, market view for the next week that I have is cautiously bullish, cautiously, because of the 2 days of green bullish moves that we had seen the last week. Now keep in mind the technical analysis is going to go for a toss in case of black swan events that come in because of the war, pandemic, social fear and all that unexpected news or spikes. Things will not work out that well in the technical analysis. Keep that in mind. It's only a study of the probability, not a confirmation. 24,000, 25,500 is what the levels I look for. The Nifty and the Banknifty is 54,000 and 57,000 from the Banknifty. So therefore, if the price is not having a green close above the 26,000 and 57,000 on the Banknifty, it still may be consolidating and not a leg of the rally for the next rally. You don't get that confirmation until it moves above that. Keep that in mind. And always hedge your positions, hedge your portfolio. Risk management is all that trading is all about, right? Analysis and all that goes for a toss at times. So hedge your positions, understand, manage your loss. That's the only thing trading is all about. So protect your capital, and also using the hedging strategies and options, all that you can make money as well. Rental incomes. Check out the playlist for that. That's what I have for this week. If you like the content, subscribe, like, and comment, and share it to others. And I'm also active on X with regular technical analysis posts and all that. If you like, you can subscribe to that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.